Good morning and welcome everyone. Today we will present our Q1 2022 result presentation. My name is Sten Kirkbak. I'm founder and CEO. Together with me today I have our CFO Michael Clement, and we will guide you through this presentation. As always, we will divide it in 3 sections. First, I will take you through some key high-level information of Q1. Then Michael will take you through the financial highlights, and I will end with an outlook. So let's look into the high-level numbers of Q1. We managed to get an overall group revenue of 74 million NOK. That's up 37%. Of that, recurring revenue represented 33.6 million NOK. That is also up 66% year-on-year pro forma. That means we ended Q1 with 124,300 subscribers, which is up 55% year-on-year. Also, we can report on a 55% gross margin representing 41 million. That's up 115% year-on-year. Overall, Q1 ended with EBITDA at negative 2.9 million and a very strong cash balance of Norwegian kroner 133,500,000. If you look into some of our key focuses of the first quarter this year, it's a handful of things we have prioritized and delivered on as well. We have continued to build a strong and growing retail footprint into new markets and with new partners. After the acquisition of Xplora Mobile last year, we have also prepared the organization to scale this business model into new market, and a lot of that preparation have been built upon in Q1. We have also transitioned the company from a traditional ODM to an OEM strategy, meaning that we take more ownership of the IP of our own product. This year, we are planning to launch 3 new products, 2 of them being OEM products. Also, Q1 has been a quarter of managing challenging supply chain situation across the world. Currently, we have managed that well and have currently not suffered from delivering the product we were supposed to deliver. Again, Q1 has been about preparing our mobile service operation. We have come a long way of doing that, and also we have therefore now gone into more focus and scale on our software and service tribe, hiring a new SVP for that division and also new hires in our software division. The business currently have 2 tribes, 2 divisions, one leading our hardware and SIM subscription services, and one leading the service development and the new revenue that will come from premium services. We have also continued to build our overall team and implemented a new ERP system, which will be introduced and launched throughout the year with the company. That was some of the Q1 focus area we have delivered and focused on. Now Michael will take you through the financial summary, and then I will come back post that with some of the outlook statements.
Thank you, Sten. So let's take you through some of the high-level financials first. Q1 is seasonally the weakest quarter for our industry, as you've seen over the last few years in our financials. The first quarter of 2022, Xplora generated revenues of 74 million NOK, up 37% from Q1 last year. Looking at this on a geographic and segment basis, device revenues in Q1 were 39.9 million NOK, down 22% from Q1 last year. Service revenues amounted to 33.6 million NOK, up 66% pro forma from Q1 last year, with group revenues at 74 million NOK. On a regional basis, Norway was our largest market in the first quarter of 2022, followed by Germany and then Sweden. Norway makes up the largest portion of our service revenues, whereas Germany was clearly the largest contributor of our device revenues in Q1 22. Xplora has a relentless focus on trying to drive increased gross profitability. In Q1 2022, we generated gross earnings of 41 million NOK, up 115% from 19 million NOK in the first quarter of last year. That represents a gross margin of 55% in the first quarter. Putting this in perspective, our gross earnings in Q1 this year is actually tenfold our gross earnings 2 years back in Q1 19. And the absolute level, is actually higher than any quarter through the year we went on Euronext growth in 2020. Recurring service revenues were 33.6 million NOK in Q1, up 66% pro forma. They represented 45% of group revenues, and an annualized run rate on the Q1 numbers is now in excess of 134.4 million NOK. Over the last 4 quarters, close to 120 million NOK in recurring service revenues, up 74% on a pro forma basis. And we exited the quarter with 124,300 mobile service subscribers. That's up 55%. This is the development of our subscriber base. We have continuously grown our subscriber base. Naturally, Q1 is also a seasonally slower quarter as a result of lower device sales. On a regional basis, we have 74,000 mobile subscribers in the Norwegian market, representing the lion's share of our total subscriber base. Sweden with 32,000 subscribers, Finland with 12,000 subscribers, and Denmark with 6,000 subscribers are all growing quickly. And overall in the Nordic market now, we have close to 6% penetration of the target age group of 4 to 10-year-olds in the region, with the highest penetration rate in Norway at 17%. But with the other Nordic markets developing very much in line with the same trend we saw in Norway at the same penetration rates. Over to the P&L in the first quarter. As mentioned, group sales 74 million NOK, up 37%, where with recurring service revenues at 33.6 million NOK, up 66% pro forma. Whereas smartwatch device sales were down 22% to 39.9 million. Gross earnings more than doubled to 41 million with a margin at 55.4%, up from 35.4% in the first quarter last year. Operating costs amounted to 43.9 million NOK, up from 30 million NOK the same quarter last year. That includes 9.1 million NOK in marketing costs. Payroll expenses. Last year in the first quarter, we had positive option costs of close to 5 million NOK, whereas as a result of a rising share price, whereas in the first quarter of 2022, we have a reversal of some option costs in excess of 3 million NOK, explaining the flat development year over year. We exited Q1 with 112 employees compared to 51 employees in the first quarter last year. EBITDA in Q1 minus 2.9, an improvement from a loss of 10.9 million in the first quarter last year. Depreciation and amortization totaled 11.8 million, and that comes from the amortization of intangibles from the acquisition of Xplora Mobile Holding last year, as in accordance with Norwegian GAAP accounting principles. EBIT minus 14.7 and pre-tax earnings minus 15.2 million in the first quarter versus a profit before tax of minus 13.6 in the first quarter last year. Over to the balance sheets. Total assets 514 million NOK, down from 576.7 million NOK at Q4. Financial fixed assets amounted to 248 million NOK on goodwill and intangible customer contracts from the acquisition of Xplora Mobile Holding. Accounts receivable came sharply down from Q4 from 78.3 million to 29.9 million on collection of strong Q4 sales. Inventories also slightly down from Q4 to 77.9 million from 82.5 million on seasonality. We ended the quarter with 133.5 million in cash. Other short-term liabilities were 62.7 million, down from 96.6 million at Q4. 20 million of that reduction is the earn-out payment for the remaining payment of Xplora Mobile Holding, as they exceeded all financial targets for 2021. We exited Q1 with interest-bearing loans of 29.9 million, and we had equity of 387.7 million, equivalent to an equity ratio of 75%. Finally, over to the cash flow. Net cash from operating activities amounted to 21.7 million NOK in Q1. Cash earnings were negative 3.5 million, positively offset by a working capital release of 25.2 million NOK in the quarter, on lower receivables and inventories, offset by lower accounts payable. Cash from investments amounted to minus 27.5 million, of which the earn-out to Xplora Mobile Holding was 20 million NOK. That leaves 7.5 million in CapEx during the quarter, of which capitalized development costs are in excess of 5 million NOK. And then in addition to that, we have investments in new ERP systems in the quarter. Cash from financing was a draw of 500,000 NOK on debt repayments, resulting in a net change in cash of minus 6.3 million and a cash balance of 133.5 million at the end of the quarter. And then I think we'll go back to Sten for a quick intro of the road ahead.
Thank you, Michael. So let's then have a look at the road ahead. Let me emphasize our three key growth strategies for 2022 and how we are planning to make our goals happen. We are focusing overall on three key goals. Number one, we will continue to develop existing and build new markets to drive further revenue growth. Number two, we will replicate our very successful Nordic NVNO model, which is very successful and profitable, and replicate that into 1 to 3 new markets outside of the Nordics. And thirdly, we'll introduce new services to support and build new recurring service revenue streams. So how will we make this happen a little bit more in detail? We have some very strong and successful markets, such as the Nordic and Germany. We'll continue to fuel growth into those markets. Then we'll continue to build distribution power with new retailers and new partners into new market as well. And of course, some of those new markets will be particularly important, such as the US market. We'll also, in some selected market, focus more on our online strategies and online launch in our own channels, having better control on price and also allow ourselves to have more marketing tools. Introducing connectivity into new market also allows us to drive more revenue, increased revenue, and will of course monetize on the introduction of our 3 new products this year. We'll also increase the focus on our sales team by adding more team members into that division. Part of this strategy, like mentioned, is part of the launch of our 3 new products, and we would like to just emphasize the strategy on our new products. 3 products, 1 entry-level product called XGO 3, and 2 premium products, X6 and X6 Pro. The core difference with X6 and X6 Pro is 1 eSIM product and 1 traditional SIM product, Also, the premium product X6 Pro have top-end chipset, best screen on the market today, and will be launched with multiple new features and functionality, all scheduled to be introduced in the market this year. As mentioned, as an important part of our growth strategy, we will grow retail partnership and distribution power into new market. As mentioned, US being one of the core important market. We therefore happily announce our collaboration with Walmart and preparing our launch with Walmart, one of the world's largest retail chain. And our strategy with Walmart is to introduce our full line of smartwatches, initially being sold and distributed online. We're also very happy to recently have announced the partnership with Target, another of the major US retailer and distributors, and Xplora is an approved vendor at Target for the full line of our smartwatches, also initially to be distributed and sold online. So 2 of the key retail partners in the US market is already secured. As mentioned, as part of our core strategy as well, to extend our successful Nordic subscription model into the global market. And as you can see, in the Nordic market, we have now achieved 6% market penetration with our business model, selling smartwatches bundled with SIM connectivity, highly profitable SIM connectivity revenue streams. And as you can see from this chart, you see that the Nordic market overall represent roughly 2 million kids, age group 4 to 10, and look into the opportunity we see in Europe and North America, replicating this business model, represent a significant opportunity for our company. For that reason, we also were happy to announce our first partnership with IQ Mobile, allowing us to introduce our first service revenue launch outside the Nordic, recently being announced. And today we will also present to you our second agreement outside of the Nordics with Transatel in France, allowing us again to replicate the same business model into the French market as well. And lastly, of the update related to our subscription model, we're also very happy to announce to the market that Xplora is now teaming up with ATT, one of the largest telco providers in the market, to launch connectivity in the US and North American markets. So 3 new models of what we announced previously the year as a target, 1 to 3 new partnership outside the Nordic to replicate our successful, highly profitable subscription model. That takes us to the outlook for 2022 per today. As mentioned, we will have strong focus on our 3 key areas for 2022 to drive our announced 50% sales growth ambition for 2022. Developing the existing and new market to add new retail, a stronger retail distribution power for the company, replicate our mobile subscription model from the Nordic into now 3 new global markets, and then accordingly to the roadmap with our subscription model, introduce new products and new services to add on top of that. Introducing the smartwatch, add connectivity from the SIM, and then on top of that, add new products and services on top of that as well. The supply chain, we believe, will continue to be challenging. We'll continue to manage that as we successfully have. And we will also see increased uncertainties to consumer spending and patterns from a macroeconomic situation. And that's again one of the reasons why we are continuing to focusing on new partnership, new distribution footprint to increase the depth of our distribution, as well as adding new product and services to increase the revenue per customer. And also, Xplora is securely funded in order to deliver our growth and our ambition for 2022. Now, let's go into the Q&A section. All right, Michael, should we? Yeah, I see there is quite a lot of good questions coming in. Let's start to review them one by one.
Sure. Let's look at the screens here. Are you considering moving to a different stock exchange? In that case, what's your time frame? Well, it's certainly a relevant question in today's market for companies doing fairly well. I guess the short answer to that is that at Xplora, we are always considering our options. Good. Even if Q1 showed a year-over-year total growth, including revenues from Xplora Mobile, watch sales were down year-on-year. Do you expect the same trend in Q2? Could you give an indication? Yeah, I guess we've not given any guidance for Q2, but given the insight and the information we have at current and so far in the quarter, we do expect a positive organic year-over-year growth in the second quarter of the year. What is the reason for the decline in smartwatch sales in the first quarter this year? Sten?
Yeah, so we saw a slightly slower sellout during Q4 because of a more conservative consumer behavior. Also, one of the reasons we provided our guidance for this year because of the trend. And that also have continued into Q1 with a slightly slower sellout per retail, per store, per channel. Also, hence the reason why we are now increasing the volume of our distribution footprint in order to have more places to sell the product throughout 2022.
Sure. Why are there no updates on the new devices in the report? When can we expect them with price ranges, etc.? Well, I guess competition is maybe...
Yeah, that's a relevant question, but the reason is that we have communicated we will release 3 new products this year, 1 entry level, 2 premium product, and given the carefully planning with our retailers related to the launch, we will not report any details of that before we are very close to launching the product, but all 3 products will be launched throughout 2022.
Good. Let's see here. We got more. Thanks, team. Is the plan to get Target and Walmart to sell in-store this year as well?
That's also a very good question. And particularly we saw a change in the strategy to many retailers throughout the pandemic and also now going into 2022. First of all, a lot of the retailers have seen an increase of volume through their online channels. And for that reason, it's very natural for a lot of the big retailers in particular to start online since the channel has been growing, but also then to evaluate the performance on the online sales before then potentially moving the products into the physical retail stores. Of course, our objective with all retail strategy will be to go into the retail store, but normally we'll start online, build good traction, and then based on performance, you can move into the physical retail stores.
Good. Could you elaborate on the mobile service provider deal in North America?
Yeah. As we have articulated, one of the core part of the growth strategy is to replicate Nordic NVNO solutions. We said we targeted to have 1 to 3 global NVNO solutions throughout 2022. For that reason, we are of course very happy to already have announced 3 in UK, France, and US. And in general, all of these integration, all of these solutions will work the same way as in the Nordic market. All product will be bundled with Xplora connectivity solution from an out-of-the-box experience with the same value proposition as we have had in the Nordic. That also goes for the North American solution, same as in UK and France as well.
Your depreciation run rate is around 50 million NOK a year. Isn't that very high? Well, we report in accordance with Norwegian GAAP, which requires us to amortize intangibles. We amortize our goodwill over 10 years, and we amortize our intangible values from customer contracts over 4 years. So that's, I guess, the answer to that. I guess there might be a misunderstanding here. That's to clarify. Do you expect the AT&T deal to be like the Deutsche Telekom deal, volume-wise? These are two different agreements.
Yes, that's actually very good to be addressed. In Germany with Deutsche Telekom, that was a distribution agreement whereby Deutsche Telekom purchased Xplora product and bundled the product with their own SIM cards from Deutsche Telekom. So the business model to Deutsche Telekom is that we provide them product with a margin on our products. Our growth strategy for our connectivity to replicate the Nordic model is for us to have our own SIM recurring revenue stream, so our own SIM card, Xplora Connect. So the agreement in the North American market was for us to enter into NVNO model in the North American market, so we can provide our own SIM card. Hugely profitable, plus they also provide an even better onboarding process because the SIM card is already there from Xplora Connect, but the key reason is to drive the recurring revenue stream to Xplora, whereby in Germany with Deutsche Telekom, that drives recurring revenue to Deutsche Telekom, but we provide the products.
Good. There are a couple of different questions here in regards to the 50% growth targets. How secure? Do you have any comments around that?
Yeah, fair question. And first of all, growth this year will not be easy for any industry relating to the consumer, to the end consumer. And I also would say if we had only the same products as we had last year, if we only had the same distribution channels, the same distribution footprint as we had last year, and the same services we had last year, I think it would be fair to say that that kind of growth would be challenging. However, that's the reason why we have emphasized that this year we will launch 3 new products, and new product always drive additional attention from the retail stores. That always drives additional sales. Plus, we are also dramatically increasing our focus to expand our retail distribution footprint. So whereby the sales per store or per channel might go down, we will compensate that with having a broader distribution footprint. More people, more retailers selling our product, that will increase the overall volume.
Such as some of the retailers that we recently announced.
Exactly. And we will also then introduce new products and services to additionally increase our revenue. So that's the key reason why we can continue to emphasize our target for the growth this year.
Will we see a new mobile application?
We are targeting throughout 2022 to also release a new mobile application. Same strategy really as we have on our product. We normally have an 18 to 24 month life cycle on our product. Same way, we also have a life cycle on our mobile application. Particularly this year, it will be important because we have been introducing multiple new products and multiple new services. So that's also part of our launch of a new mobile application this year.
Good. Do you expect new products to have a higher margin than the old products? I guess, as you know, there has been a general increase in the price of many components over the last couple of years. This will most likely, on many products, lead to slightly higher average selling prices in general. We will continue to target an overall percentage margins on our devices of around 30%, but that implicitly will mean that the NOK contribution will most likely increase. Competitive situation. Are you gaining or losing market share?
Without having official number on market share, at least the feedback we are getting from our distributors and retailers, it seems that we are growing our market penetration, our market position in our core markets so far.
Let's see here. Last year there were a lot of conversations about the delay in the US. What's your view on the US?
Oh, yeah. Good question. And actually, I would like to first address the fact that we had ambitions for US last year. And as we communicated to the market last year, that it was rather difficult to really have success in US because we were not allowed to even fly into US. And for that reason, we are very happy that already now, just a couple of months after we actually could start to travel to US, we started to build our office in US immediately after CES in January this year. And only a couple of months later, we are very happy to start to announce our first partnership, as we have recently done. For that reason, we look optimistically for the further growth ambitions in the US market. But of course, US is a big market. It takes time. It's very big retailers we have conversation with. So even though we have introduced and announced the first partnership now, it will take some time to build the momentum to integrate marketing properly and execution. Again, allowing us to expect results of that into the second half of this year. But we remain optimistic for US, particularly now when we actually can be on site.
There are a couple of follow-up questions in regards to Q2. I guess, as we mentioned, we don't have an official guidance for Q2, but we will say that we expect a positive revenue, group revenue, year-over-year growth in the second quarter over the second quarter last year. Will you try to get more analysts to follow the stock to increase share awareness? This is absolutely on our agenda, and we try to approach this proactively. I think you will see more attention from more investment banks and more activities. We have been in a few conferences. We try to get out to communicate and be available to the investor market as much as we can do, and we will continue to do that. Attending investor conferences and hopefully also have more analysts following us and writing on us. I think we're starting to get out of time. Why the shift in focus towards connectivity this year?
Yeah, that's a relevant and actually very, very important question as well, because first of all, for practical reason, we do see better customer satisfaction when there is a pre-installed SIM card inside the box. Customer open the box, start the product, and basically you are live. So a better customer satisfaction. But then of course also it's a very different business model with a much better profitability if you are selling only a smartwatch versus selling a smartwatch with a connectivity. It's roughly 7 times plus the profitability and revenue on that product versus only selling hardware. And also having recurring revenue, we tie the customer to the Xplora for what we see in the Nordic market, roughly for 3 years. And also it's a very important part of our value-added service strategies, which we have currently developed a lot of new services. We have introduced a lot of these services, but we haven't started to monetize on those services yet, because we are seeing a very clear correlation between what is the best time to upgrade to premium services. It's at the point when you are already onboarding a product and activating a SIM subscription with Xplora. At that point, it's the best time to upgrade to additional services, which you also then will pay for. So that's why over the last year, we have introduced a lot of software services, although we have not charged for those services, but we have gained a lot of insight. And as we also previously have communicated, we have now tied our value-added service strategy toward our global NVNO solution. So going into the market, into 3 new global markets plus the Nordics, we now have 7 markets with connectivity in order to really have a good strategy to introduce our premium value-added services throughout 2022. And we have with internal users on the Xplora customer base plus third party, more than 100,000 customers using our GoPlay services. That has allowed us to get a lot of insight how they onboard, activate and use the services, which we seem very optimistic for the introduction throughout 2022, jointly with the connectivity.
Are there any plans for an NVNO agreement in especially Germany, since a lot of the sales are from Germany?
Very relevant question. When we said we targeted 1 to 3, of course, Germany would naturally be in the scope where we would like to have such an agreement. We will immediately announce when we enter into an agreement. We have now announced UK, France and US, and Germany will of course be on our target list to achieve that as well.
Here's another interesting. Xplora has a story of strong corporate responsibility. What ESG strategies will we see in the near future?
I think first of all, I would like to address on that question that since Xplora have had this strong ESG strategy, it actually has allowed us to enter into some of the retail agreements, some of the partnerships agreement that we now have announced. So for that reason, our ESG strategy has been important. We also do see that when we have project on our GoPlay platform, on our services that emphasize kids to help other kids or help the environment, we see that that is the kind of campaigns that performs very well. So what you will see and what you should expect of Xplora in the future is for us to strengthen this relationship of having kids to be more active and allow this activity to trigger various sustainability projects. More of that to come.
Good. I think we're getting towards yes. I think we're getting towards the end. There's one more here now. Aren't device sales the foundation for growth and service revenues? I mean, people don't buy a SIM without buying a watch, correct?
That's correct. That's the beauty with our model, because since we have a mobile phone in the form factor of a smartwatch, you have to have a SIM card. So there's no option, and that's the reason why we make it as simple as possible for the customer to just out of the box activate our SIM card, because you have to use a SIM card. And again, that's why also at that point we would like to upgrade to more services at the point where you're activating the service. So still, we believe that the smartwatch itself is a Trojan horse in order to drive connectivity, and connectivity services is the way to drive best possible conversion to additional premium services.
And naturally that explains why we are now in 2022 expanding and rolling out the connectivity business to more markets so that we can use the device as a Trojan horse to introduce new revenue streams in more markets than we have previously.
Good.
Good. I think we have covered pretty much all the questions.
And as always, if you would like to see the presentation from today or all the documentation, as always, they're available at xplora.com/investor. And also, as always, Michael and myself will always be available for any additional follow-up question. Thank you so much.